Time now for business and more on that roller coaster ride for shares in Deutsche Bank. Let's say hello to Kate Moody.
Hi, Francois. Indeed, we've had quite a busy day on the stock markets, particularly for Germany's largest lender. It saw its shares plummet below 10 euros this Friday. That's its lowest level in 3 decades, before rebounding sharply towards the end of the session. That's when it was reported that the U.S. Justice Department would settle for a $5.5 billion payment rather than the $14 billion that it had been seeking for mis-selling mortgage-backed securities. That would be about in line with settlements that other major banks have reached over similar claims in the U.S. And we can take a look at just what's been happening to shares this week. You can see the initial falls there on Monday, followed by that massive drop as Friday's session got underway. And then the recovery, Deutsche Bank's Frankfurt-listed shares actually closing up about 6% at €11.57 per share. So quite a dramatic ride there, and most European indices followed suit. We saw the DAX rising fairly strongly towards the end of the session, closing up 1%. The CAC 40 climbing just above the flat line, and the FTSE 100 ending the session just slightly in the red there. Wall Street has also turned pretty sharply upwards. The Dow is trading up about 170 points there. You can see the Dow Jones and NASDAQ up nearly 1% each there, and the S&P 500 not far behind. Now, earlier I spoke to Jasper Lawler, markets analyst at CMC in London, to get his take on the fears that on the fears of contagion that have dragged down both Europe's banking sector and global stock markets. Take a listen.
It's that contagion fear, people casting their minds back to 2008, and a number of parallels between what's happening at the moment with Deutsche Bank and what happened with Lehman Brothers before its collapse. There are some parallels, but perhaps the market's reading a bit too much into this. But of course, that had very far-reaching implications, the drop in Lehman Brothers stock and its subsequent collapse. And so obviously, there's been some kind of risk-off type scenarios in markets, investors worrying about what the outcome could be.
Well, I think that is exactly it is the top question on investors' minds. Is Deutsche Bank the next Lehman Brothers? You don't seem to think so.
No, well, I think there's a couple of key differences with Deutsche Bank and Lehman Brothers. Probably first and foremost is that Lehman Brothers wasn't able to get access to cash when it really needed it from the Federal Reserve. It was declined, and so it subsequently was unable to pay back all its clients and depositors that were pulling funds over worries about its profitability and its impact, in its portfolio of risky assets. Deutsche Bank in a similar situation where it's very low profitability because of this low interest rate scenario, constant fines coming from regulators because of past indiscretions, but it does have access to the European Central Bank. It's got a much wider set of assets. It's not just an investment bank, it's Germany's biggest retail bank, and so that enables it access to the ECB. So worst comes to worst, it has the European Central Bank to back it up. And it actually does have, according to the latest stress tests carried out by the ECB, it does have a bit more capital on hand. So should we see more of what we've seen this week, where hedge funds, big clients of Deutsche Bank, start to reduce their exposure to the bank and pull their money out, Deutsche Bank just has a bit more ability to pay them back.
And how much of the problem facing Deutsche Bank is based on rumors and reputation, and how much would you say on liquidity and the lender's real financial reality?
Well, that is the thing with banks, obviously, is that they never do have enough liquid assets should everyone want to pull their money out. So it's always a bit of a kind of liquidity scare just around the corner. But I think fundamentally what's behind this is that in the UK and in the US, the banks here and across the pond, they made some tough decisions in 2008. They wrote off some loans. Governments obviously took stakes. Similar things have not happened in Europe, and by kicking the can down the road, not really addressing some of the fundamental problems of these non-performing loans, the low profitability environment and how to adapt to it, they've really just created more problems for themselves now.
And just briefly, Jasper, what do you take from this statement that was issued today by Deutsche Bank's CEO and these denials that we've been hearing all week that the German government says it's not working on a rescue plan? Do you believe them?
I don't. I think it would be irresponsible of any government to not have some kind of safeguard in place should something come to fruition like this. I mean, Deutsche Bank is Germany's biggest lender. It would be surprising if they didn't have some sort of plan if things were to turn sour. So I think they probably are working on something. I think there was talk of a 25% stake. That's probably more speculation than reality, but I certainly think they'll be working on something. And to the point on the CEO, that actually, I would say, played into the fears of investors today, because to hear John Cryan make these kinds of comments, to write a letter to his staff talking about the safety of the bank, was very reminiscent of Dick Fuld, the CEO of Lehman Brothers, shortly before its collapse.
Jasper Lawler giving us his take on this ongoing saga with Deutsche Bank.
All right, and the end of that roller coaster ride will come later when Kate will give us the final word on Wall Street for the week.